If there's one thing the world loves more than cheap debt, it's chaos. And right now, we've got both in spades. If you follow the gold market at all, you've probably heard about the commotion going on at the Bank of England. That stuffy central bank that suddenly found itself at the center of a gold rush. In my last video, I talked about it, and I got some feedback that many of you would like more of an explanation of what's happening here. So I thought I'd make another video on it, going through the progression here. Now, this isn't your typical gold rush. This is a gold run. A mad dash to pull physical gold out of the Bank of England's vaults as the world prepares for a seismic shift away from the US dollar. And if you're a gold investor, this is your moment. Buckle up, because gold is about to explode higher and the Bank of England's gold discount appears to be the canary in the coal mine. Or should I say, the canary in the gold mine. Let's break this down step by step, because the mechanics of what's happening here are as fascinating as they are absurd. Okay, so what started this? Well, Donald Trump's love of tariffs. His latest round of tariff threats on everything from Chinese imports to Mexican goods has sent shockwaves through global markets. Donald has always believed in tariffs, dating back to him going on Oprah in the early 90s.
They live like kings, and yet they're not paying. We make it possible for them to sell their oil. Why aren't they paying us 25% of what they're making? It's a joke.
In his second term, he isn't laying down. He's going full throttle and pissing off the world while he's doing it. And it's got global markets freaking out. The reason is simple. Tariffs are essentially a tax on consumers. And when consumers pay more, GDP takes a hit. When GDP takes a hit, governments step in with stimulus packages funded by, you guessed it, printed money. And when money gets printed, inflation rears its ugly head. Gold, the ultimate inflation hedge, thrives in this environment. But Trump's tariffs have done more than just stoke inflation fears. They've made large gold holders nervous about holding their gold abroad. This has created a logistical nightmare for gold traders, particularly those dealing with the Bank of England. The Bank of England is one of the world's largest custodians of gold, holding over 400,000 bars worth more than $450 billion. These bars are stored on behalf of central banks and select commercial operators. Normally, gold stored at the Bank of England trades in lockstep with the London spot price, but right now it's trading at a discount of more than $5 an ounce. Why? The big problem is that the Bank of England can't process withdrawals fast enough. What used to take a few days now takes up to 8 weeks. The Bank of England isn't a commercial vault. It's not set up to handle a sudden surge in withdrawal requests. Think of it as trying to order 100 Big Macs at a Michelin-starred restaurant that isn't just equipped for the volume. The gold stored at the Bank of England is in 400-ounce bars, which can't be delivered directly to the US. They need to be refined into smaller 100-ounce or kilo bars, a process that adds time and cost. As a result, gold stored at the Bank of England has become less attractive. Traders are willing to accept a discount just to offload it quickly. Meanwhile, gold in accessible commercial vaults are trading at a premium. And the rush is largely because we don't know what impact the tariffs are going to have. And the large holders of gold feel more comfortable holding their gold locally or in the US. So the difference in pricing at the Bank of England and why it's discounted largely boils down to the timing of delivery and the speculation of what pricing the tariffs will create. Simply put, would you pay more for a bird in hand or a bird in the bush? Or in Donald's case, a bird in a bucket? The Bank of England's gold run isn't just about tariffs or logistical hiccups. The shift to gold started before Trump and the tariffs even came into play. It's part of a broader trend. The world is decoupling from the US dollar. Here's a picture that a friend sent me of an advertisement in Mexico. It says, Jeeves, pay suppliers in China with transfers in just one click. This is a sign of where Mexico is going. For decades, the US dollar has been the world's reserve currency, the go-to medium for international trade. But Trump's tariff tantrums, combined with the Federal Reserve's money printing spree, have eroded trust in the greenback. Countries like China, Russia, and India are increasingly trading in their own currencies or turning to gold as a neutral, counterparty risk-free alternative. Gold has thousands of years of history as the backbone of monetary systems. It's no coincidence that central banks have been net buyers of gold for the past decade, with 2024 seeing a 53.5% increase in purchases. And we've seen countries like Poland, a NATO member by the way, quietly repatriating their gold from the Bank of England. Another sign of the gold market's stress is the spike in lease rates. Normally, gold lease rates hover around 0%. Right now, they're closer to 5%. This indicates an extreme demand for physical gold, as traders scramble to borrow bullion to meet delivery obligations. Historically, spikes in lease rates have been associated with periods of financial instability. This time is no different. The combination of tariff fears, dollar distrust, and logistical bottlenecks has created a perfect storm for gold. So what does all this mean for gold investors? In short, it's time to get bullish. The Bank of England's gold discount is a temporary anomaly, but it's also a symptom of a much larger trend. As the world decouples from the US dollar, gold will become the natural medium for international trade. It's tangible, scarce, and historically reliable, qualities that make it the ultimate hedge against economic uncertainty. Meanwhile, retail investors are selling their gold to chase the latest crypto craze. It's a classic case of the smart money buying while the dumb money sells. We have people buying the Hawk-Tuah coin, Trump coin, or Fart coin. And these are not tied to anything tangible. I wouldn't even call them securities because they aren't secured to anything. It's basically just buying into a half-baked idea that is backed by nothing other than the hope you can find a greater fool before it goes to zero. Don't be the dumb money. In a world where fiat currencies are being debased by endless money printing and geopolitical tensions are running high, trust is the new currency. Gold, with its millennia-long track record, is the ultimate store of trust. As for the Bank of England, well, let's just say it's learning the hard way that when the world loses faith in paper money, gold is the only thing that shines. Folks, the show is just getting started. Gold is about to explode higher, and the Bank of England's gold run is a preview of what's going to happen at banks all over the world. All right, everybody, I appreciate all the views we're getting lately. All of the comments we're getting, it means the world to me. It honestly does. We've been doing this for a few years. Big believers in gold. We started this channel. Gold was trading around $1,500. Now it's trading near 3,000. Everybody said I was crazy, but now it's starting to pick up. Everybody's starting to realize what's going on. I was early, but I was right, and I'm still right. This is just getting started. The fact that you're here tells me that you're at the right place at the right time. I appreciate all of you who took the time to watch this video. And please, please let me know what you think in the comment section. Give it a like and subscribe if you haven't already. Thanks for watching, everyone.